The markets have rallied on everything at the moment, including perhaps a potential vaccine for coronavirus, although the World Health Authority immediately denied it. So it's really strange at the moment. We're in a situation where the World Health Authorities are saying there's a big issue. And if you look at it, the UK government said 30,000 Brits in China, you need to leave. We're in a situation where the Hong Kong government have said anybody coming from China has got to go into quarantine. So there's obviously a serious problem in the opinion of the World Health Authorities. But whatever happens in the market, they seem to go up. So China's put some liquidity into the marketplace, but really, does that make such a massive difference? It really is a strange environment where you've got one set of circumstances, the health authorities saying massive issue, and the stock market saying, in effect, no issue, this is going to get solved and going up. Okay, something has to give. Either coronavirus is not as serious as thought by the health authorities or by their actions, or the market has got it wrong. Why? Not just the effect of people being affected by coronavirus, but the fact that people in China aren't working. The area, the province where this has actually occurred is responsible for 69% of Chinese GDP. You've got a country that has been teetering, has had problems over the last few years. In fact, in December, there were 3 banks that actually went out of business simply and solely because the Chinese economy is struggling with trade wars, etc. If China was to have a massive slowdown, it's 17% of the world economy. It's bound to have an effect on the rest of the world. First of all, China would affect Hong Kong. Hong Kong, of course, is a massive business partner. It would affect the companies in Hong Kong. It would affect the rest of Asia because they do so much business with China. But also countries like Germany would be affected because they sell so many cars into China. The effect of this on the markets could actually be massive. At the moment, nobody seems to be taking that into consideration. Let's hope the markets are right and the health authorities are overreacting and there isn't going to be a massive slowdown in China. Okay, from my point of view, I'm not a health expert, but I'm an investment advisor. And I've been in the industry for a long period of time, seen many different situations. And I would certainly say, be diversified. Make sure that you've got your money across different asset classes. The markets may well continue to rise because there is nowhere else to put your money at the moment. Nothing's offering yield. Government bonds are very low. If you put your money in a bank account, you're getting 0 or even minus in some countries. So the stock market has advantages. There's yield there to be gained. But diversify. Things like gold would go up if there was a massive slowdown in the world. So I'd actually say it's a time to be cautious, time to be careful. Be careful from a health point of view, because all of us need to make sure we do that, but also be careful from a investment point of view. In fact, coronavirus is more likely to affect your investment portfolio than it is to affect you from a health point of view. So just make sure I'm sure you're protecting from your health. You should be, but you definitely should be protecting from an investment point of view.